Michael Burry started to warn about the stock market found in a passive investing bubble. Hello and welcome back to our channel. Today's topic is Michael Burry's warning for the index fund bubble in 2023. Watch this video till the end. Before we begin, make sure that you subscribe to our channel. Index fund bubble. Michael Burry first raised the alarm about the stock market's bubble in passive investing. The SPY ETF, as well as less-priced S&P 500 index mutual funds, will be the main focus of passive investing in 2022. Approximately 21.2% of the shares of S&P 500 companies are held in passive funds, up from 3.3% in 2003. With the conviction that these investments will always increase in value over time, this generation has grown increasingly accustomed to dollar-cost averaging into the stock market. Over its history, the S&P 500 has experienced 50% drawdowns and annual returns of about 12% on average. The buy and hold S&P 500 approach is advised by even Warren Buffett as the best one for the majority of passive investors. The long S&P 500 investment may now be too crowded and require ongoing buying power to maintain it at current prices. Profits can be made in the stock market, but they can also be realized while selling. The bulls painfully learned this in the early 2000s. Burry notes that the dot-com and tech bubble in the stock market in 2000 contrasts with the passive investing boom we're witnessing in 2022. What is Michael Burry predicting? The S&P 500 index bubble may bust if all investors start to sell due to a loss of confidence in their platform. If contributors ceased making regular contributions to keep prices stable, the index could stop rising or even crash. Although the price-to-earnings ratio may appear lower in bear markets, the market is already pricing in lower earnings over the next few months and years. With other types of investors and traders holding shares in 78.8% of the S&P 500 companies, it won't be difficult for the index to fall even further. Supply and demand, not ideas or methods, drive the movement of all stock values. Even in the case of the S&P 500 index, the price movement will be determined by the volume of buying and selling at various levels. The individual stock rates of the companies in the index are somewhat impacted by the buying and selling of the S&P 500 index. They will correlating fluctuate up and down with the movement of the index. Nowadays, a significant portion of trading in S&P 500 businesses occurs indirectly via mutual funds and exchange-traded funds that track the index. Shares of these companies are traded on SPY, a secondary market. The shares are held by the SPY exchange-traded fund, and the SPY ticker is traded depending on these holdings. As a result, a sizable portion of the company's shares is no longer directly tradable on the stock exchange. Vanguard claims that 94% of SPY trading has no impact on the underlying shares it owns. What is Michael Burry's take on the state of the economy? Michael Burry foresaw a recession in June 2022, and so far he was right. As consumer spending decreases, economic growth ends, and the economy starts to contract, stock markets frequently crash during recessions. Recessions are a natural part of the business cycle. They're primarily brought on by the need for monetary policy to raise interest rates to cool down an overheated economy. Before the Federal Reserve starts to hike rates, bubbles have typically formed, and inflation has started. Sometimes the bursting of financial bubbles results in crashes and the unwinding of asset classes like stocks or real estate, which results in a glut of supply on the market and lower prices. Employment happens to peak later once the economic drop has started, even if the unemployment is one sign used to determine if a recession has started. As a lagging indicator, high unemployment and claims for unemployment benefits may persist well into an economic recovery. Instead of a sudden turnaround and improvement in circumstances, the recession's end signifies the bottom of the economic decline and the beginning of an economic recovery. Growth does not immediately resume after a recessionary cycle. Why did Michael Burry sell every stock he owned? Michael Burry has sold all his positions, which were worth more than $200 million as of March 31, 2022. As of the conclusion of the second quarter of 2022, the only stock he owned was that of private jail operator GEO Group. As he switched to all cash, this investment reduced his portfolio exposure to only $3.3 million in this one position. In the upcoming year, he predicts that a severe economic downturn and stock market crash will drive stock prices back to their valid intrinsic values. He doesn't have high hopes for the stock market or its current valuations. Thanks for staying throughout. Do like and share this video and tell us your response in the comments below. Until next time, goodbye.